Hello guys and welcome to another deep value video. Today we're going to deep dive into the financials of Shopify, ticker symbol SHOP. Let's start with a brief overview. Shopify is a company operating in the tech industry. This company is known for the online store website builder Shopify. As of the 10th of August, the stock price stands at $69 and it has a market cap of 88.5 billion. Moving on to some key valuation metrics, the company's price to earnings ratio is 95, while its price to cash flow ratio is 67.8. Taking a closer look at the company's growth over the past 5 years, we can see that its revenue has grown by 347%, whilst its bottom line has improved by 105.6%. In terms of earnings per share, there has been a growth of 90%. However, it's important to note the change in the number of common shares outstanding, which stands at 1.3 billion, reflecting an increase of 5.2%. Additionally, the interest rate coverage ratio is 3.2, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 7.3. This ratio helps us understand the company's short-term liquidity position. Looking at the long-term debt to equity ratio, we find it at 0.1 and the overall debt to equity ratio at 0.23. Transitioning to the cash flow statement now, you can see that cash from operations is 950 million, reflecting a change over the past 5 years of 1,229%. Meanwhile, cash from investing is minus 1.24 billion, showing a change of 118%. Furthermore, cash from financing activities is 16 million, showing a change of minus 90%. Lastly, free cash flow has grown by 1,630% during the same time, from minus 55 million to $905 million, and is projected to grow to 1.8 billion in fiscal year 2024. Moving forward, let's look at the return metrics to see how well the company is utilizing its resources. The return on equity is 15.3%, which gives us an idea of the profitability relative to shareholders' equity. The return on investment is 12.3% and the return on assets is 12.1%, both indicating how efficiently the company is generating returns from its investments and assets. Additionally, the return on invested capital stands at 6.6%, a crucial metric for understanding the effectiveness of the company's capital allocation. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of 15% for 10 years, and a perpetuity growth rate of 4.5%, we get a fair value of $35.75. Second, using a multiples valuation of 20 times trailing 12 months price to earnings, operating cash flow, and 25 times free cash flow, we get a fair value of $19.95. Thirdly, the analyst target price is $107.5. Putting it all together, we get an intrinsic value of $54.4, and using a 15% margin of safety, we get an acceptable buy price of $46.2, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I rate Shopify as a hold. Personally, I would consider investing in it only if its price dropped to sub 40 levels. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.